is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit
That's awesome.
for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Kicking into last couple weeks of August. Pretty intense. Don't make assumptions. Assume nothing. In any kind of relationship, we can make the assumption that others know what we think, and we don't have to say what we want because we assume they're going to do what we want because they know us so well. If they don't do what we want, we feel hurt, think, how could you do that? You should know better. Market-wise, let's take a look at it out here. We have the Dow Industrials up 96, NASDAQ up 4, S&P's up 5.5, gold contract up $13, trading at $11.9730 an ounce. Silver up 11 cents. $14.74. Let's get over to the gold contract and take a look and see what we have happening here. So, gold got smoked last week. It has been getting smoked since April. Last week we get down to 11.67. We are at the up 13 bucks right now. You have 193,000 contracts traded. Gold's going to have to basically get a lot more than this going. You know, listen, it's a start, but bottom line, you need wider price spread. We need more volume. 12.21 is the number. Well, actually, 12. Yeah, 12.12. 12 is the number to get back inside the higher range. We go over and we take a look at the silver market. Silver right now is trading up 0.7%. You're at $14.74. Silver has to get back inside the $15.18. And right now, 69,000, that also needs more contract volume. Oil market is up 52 cents. You're trading at $66.40. Notes and bonds, folks, continue to say they want higher price, low yield. Pretty wild. You have the 10-year right now up 12 ticks, 120.20. 30-year is up 30 ticks. Almost a full point. 32 ticks are a full point. You're at 145.15. They both are moving higher, have volume behind the move. If we take a look at the TLT, which is the ETF for the 20-year plus bond, you're going to see that also is pushing into the higher end of this consolidation. So we're at 121.78. The higher end of this consolidation is at the 122.5 level. I expect we're going to go up there. The real question's going to be, can it take that area out? Because if it takes that area out, that is going to get us in a whole new area that we haven't been in since February. So we're approaching where the rubber is going to hit the road inside the 10-year, the 30-year, the 20-year TLT. Because if we do break topside inside the 10 and the 30, what you're going to see is that we're going to see this dollar going lower. Right now, the 10-year is at 2.823. And the low for the last 3 months has been 2.7. The high is 3.06. And, you know, so it's going to get intriguing watching this whole thing shake out. King dollar looks like it's going to make a run to try to get back inside this lower range. You know, 16,000 contracts. That's not a lot of contract volume on the way down. That being said, it is definitely higher than we've had as this contract is back down. The number I suspect that we're going to go after tomorrow morning is more than likely this 95,440 number. That's what we broke out of. It's between 95,440 and 95,255. And right now, bottom line is that you're still backing down. You do have light volume on the back down. The kicker inside the dollar is that last week, you got to higher highs on the daily, on the weekly, but yet you gave it up on price, and the volume was dramatically lighter on the weekly basis. So that sets up the run back into lower price. We take a look at some of the higher volume equities out here, and it's going to be a low volume day. Last couple weeks inside the summer. Labor Day, of course, up in the Northeast is a big deal. Right now, we get Advanced Micro up 14 cents. You get NVIDIA. This spun around. Oh, this is interesting. Let's go look at NVIDIA. So NVIDIA is up $3.90. This is off a low of $10 today. So NVIDIA had a low of $238. You're at $248 right now. This got some juice intraday, which helped out the NQs. But guess what? This is pretty sick, folks. That the chip stocks could actually get some bids underneath them, and yet the NQs still can't do a thing, because what you had out here as we started the session this morning is that all the chip stocks were the weak links inside the NQ. So if we go to Intel, let's go take a look at Intel. Intel, it's still down 62 cents. Lam Research, LRCX, Lam is up. Lam had a low today of 166. Right now it's trading 171. What Lam is doing, Lam is going after its lowest swing point, and it actually does have volume going after it. So I expect what we're going to see, and Lam's still making its way down to this February 9th high volume swing low. 156 is the number. We got down to 166 last week. 166.32 this morning. We hit 166.97. This high volume low is going to get whacked. The real question is it going to build more cause before it goes after it? And if you build more cause, if Lam builds more cause before it goes after it, then it's big trouble in paradise, because the building of cause thus far in Lam has been to the downside. And specifically what that means is that each and every time you're coming down, you had an expansion of volume versus going back up into the top of that consolidation. We go take a look at the GDX. The GDX, of course, is the Market Vectors Gold Mining Trust. This baby is up 16 cents. This is going to need a lot more volume, too. 36 million shares. This has to get back inside. Let's get this baby up. Okay, so this has to get back inside. Oh, it's doing it, actually. $18.58. That was the number. Yeah. So this is back inside now. So the GDX, folks, as well as the XAU and the HUI, broke their December 2016 swing lows. Now, they broke them with dramatically lighter volume. The GDX looks like it's going to be the first one that can get back inside it. If that's the case, that's going to be a good scene. You know, there's many of the equities that didn't break that actually were going down, testing that area, and that's the one you want to keep your eye on. The ones that did break it, they are going into the strength from February of 2016, and we'll see, you know, they're coming into that strength with dramatically lighter volume, but the bottom line is that you got to hold price. Our phone number is 877-927-6648. Dow Industrials are up 107. NASDAQ is up 10. S&Ps are up 7. Stay right there, folks. Coming back with our man, Mr. Steve Rhodes. We're going to be talking markets. We're going to be talking his workshop that's coming up this Wednesday, 5 o'clock. Check it out. Front page of TFNN.com. Come right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. 877-927-6648. We have the Dow Industrials right now up 111. NASDAQ is up 11. S&Ps are up 7.5. And, folks, as you come over to our website at TFNN, you are going to see right in the top of the carousel our man, Mr. Steve Rhodes. He's going to be doing a Momentum webinar. This is for his subscribers. This coming Wednesday night, August 22nd, 5 to 6 Eastern Standard Time. You can become a subscriber right here, right now. The way you do that, you go to TFNN. You're going to go to newsletters. You're going to go to trading newsletters. See, Mastering Probability comes with a 30-day money-back guarantee. And, of course, what you're going to see is our man, Mr. Steve Rhodes, is the #1 market timer inside the S&P 500, according to Timers Digest. So that, folks, is absolutely fabulous. It's hard to do. He stayed up there, and he stayed up there now. It's quite a while, man. It's a beautiful thing, man. You're up there like around 6 months now, right? Is it?
Yeah, so really that it turns out to be 18 months, Tom. They don't put the results of any newsletter subscriber until they have 1 full year's worth of data.
Right, I know that, yeah.
Yeah, so it was March of 2017, and the first time that they could report was March of 2018. So it was pretty cool to get that #1. Back then it was for the 12, 6 and 3 month time frame. It's been great to stay up there, working as hard as I can to stay up there through the end of December. Well, and beyond, obviously.
Sure, but, right.
You know, because that then gives you the timer of the year,
right?
Because of the calendar year. Was up there in gold. Was at #1. Have fallen back there, but I'm either 1 or 2 when it comes to Treasury bonds now for the last 12 months. So it's pretty cool.
Good. Congratulations. It's huge, man. It's huge.
Yeah, to be able to do that. So it's very cool. And talk about, just time flies.
Oh, man.
You were saying, as you were saying, 2 weeks from today, we won't be here live on the air because it's a holiday, Labor Day.
Wow.
I won't have the opportunity to be with you next week because I've got a dental thing that I've got to take care of. But it's already the end of summer. Now, it doesn't feel that way for us in Florida.
Right.
But in essence, it's the end of summer. So towards the end of summer, for my subscribers, I'm going to share with them another very cool proprietary tool that I created, which helps a trader, an investor, doesn't matter what time frame, what instrument, to be able to measure the momentum of any market. As you said, it's for all subscribers, and anyone can become a subscriber just by coming over to the TFNN website and signing up and getting a risk-free trial for the next 30 days. It's going to be Wednesday between 5 and 6, but you don't have to attend live. So if you're listening, folks, and you're on vacation, you'd still like to gain access to this, it'll be on your members page for the next 30 days. It'll be a great education. And I'll start in trying to describe what it is that we'll be doing. One of the things I think that each of us, we all love, I love great comebacks in sports out there. And there's many of them. One of the so-called, in sports, writers go back and forth with regard to what's the greatest comeback. And one of the comebacks, is certainly in the top 5 out there, is what they call the Mardi Gras Miracle. Now, this goes back to 1994. And so for those folks that are college basketball fans, it was a game between the Kentucky Wildcats and Louisiana State University, LSU. And they rallied. They were down 31 points with 15 minutes to go, which in basketball might seem like a lot of time, but that still was just simply an amazing comeback. And the metaphor there is when you're taking a look at comebacks and you take a look at something large like that, there has to be a shift in momentum. And, another great comeback, this one is probably more near and dear to your heart, was the 2004 Boston Red Sox, where they came from a 3-0 deficit.
Right.
To beat the Yankees.
Totally. That was sick. Yeah.
So, every great thing, every great sporting event or things in life, you've got to be persistent and not give up. And it's true of the stock market, too. So when I take a look at sporting events, I kind of consider the stock market a sporting event. There's new information that's being presented to us. And so I developed this tool. I call it the RMI3, stands for the Rhodes Momentum Indicator tool that measures the change of momentum out there. And in a few weeks, we've got the Ryder Cup that's coming up. And anyone that's watched great comebacks knows that you've got to be able to feel for and identify that change in emotion out here. Now, what I like about this picture here, Tom, is this is a picture of Jim Furyk on the left-hand side with his hands up on his head. Now, he was on the Ryder Cup team. This year, he's the captain of the Ryder Cup team. And that was called the Miracle Medina, where Europe was down 10-6 going into the Sunday finals. It looked like it was over, and they came back and certainly won the cup in Illinois. By the way, that was the first time they had a Ryder Cup in Illinois. I don't know if the Ryder Cup's going to be up in Illinois anytime soon, but it's really all about measuring emotion. When you take a look at comebacks, or you take a look at these markets, and I consider emotion to be the ultimate power, and emotion to truly be the driving force, and emotion truly shapes all of our destinies out there. Well, when it comes to trading and investing, emotion is what drives the markets too. And so I've developed a system that measures the emotions of the markets. Again, it's called the RMI3 system. And what it does, Tom, is it measures specific momentum data points that help to identify momentum. These aren't swing points. So I'm going to be teaching folks something that's new out there, something that they hadn't seen before, unless they were a subscriber from maybe about 4 or 5 years ago when I developed this tool out here. And you'll see different signals on the charts out here. You'll see some red squares and some green squares out here. And this happens to be a monthly time frame chart. And it's always good to understand momentum inside of the marketplace. And if you take a look at a monthly chart out here, you'll look between 1994 on the left-hand side of the screen, between 94 and 2000. You'll see all of these red squares that we're building, one green squares, telling you that the buyers were the ones that had the momentum. If we take a look at where we're at now, you see the same thing from 2000, 2007. And now since the 2009 timeframe, we've only had 2 of these green signals out there. And that's really important because that's just simply your normal retracement move out there. And I'll teach subscribers how to go ahead and trade that, how to use that from their investing standpoint. You talk about King Dollar out here through 2017, what we saw on a weekly basis, nothing but these little green squares that are out there. Again, that's part of the Rhodes Momentum Indicator 3 signals. Now what we have is we have a change in that momentum. Yes, a pullback, I agree, but I also take a look at King Dollar continuing its longer-term move higher. So again, it's going to be August 22nd. It's going to be between 5 and 6 p.m. folks just come on over to the website, TFNN website, sign up for the newsletter service. It'll be great education, as well as a 30-day trial of the newsletter service. And there will be a couple of other workshops that are on their members page to bring them up to speed. So I want to kind of just leave, since I won't be with you next week as well, and then we've got the holiday. I just want to give people my bigger picture of the markets out here. And that just simply is that capital is going to continue to flow into the U.S. dollar and into the U.S. stock market. In the upper left-hand corner is the U.S. dollar. And then we've got all the other currency pairs in the next two rows up there, whether it's the Chinese yuan, whether it's the Japanese yen, whether it's the pound, Canadian dollar, the euro as well out here. And at the bottom, you've got a couple of indices. You've got the DAX, the Shanghai, and then the Dow. And if we just use simple trend lines, and we could go take a look at charts from around the world, all the money is flowing into the U.S., whether it's the U.S. stock market, whether it's the U.S. dollar, or whether it is bonds out there. So that's my bigger picture with regard to where the markets are going. But I'd love to teach people about the Rhodes Momentum Indicator 3 pattern, and I'll do that on Wednesday evening.
And folks, you just go to TFNN. You'll see Steve right in the top of the carousel. Sign up for his newsletter. Great newsletter, 30-day money-back guarantee. You'll be in it Wednesday night. Great rundown, Steve. Look forward to the show tomorrow. Look forward to the webinar Wednesday.
Thanks, Tom. Take care.
Stay right there, folks. Come right back.
2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 99. Nasdaq's up 8. S&P's up 6.5. Let's go over to NVIDIA. So NVIDIA intraday out here, folks. Caught a bid, and what that's about, in fact, Mr. Dave White was talking about this on my show on Friday afternoon. So let's see what they did intraday. So NVIDIA unveiled a new graphic chip design for computer gamers, aiming to bolster demand and amid the concerns that growth may be slow. And the company's new turning design will appear initially in 3 new GeForce cards to be available September 20th, starting at $499. So bottom line is that if you did catch my program in the afternoon, Dave was talking about the speed of these are like beyond belief. And I guess it definitely put a bid underneath NVIDIA. We'll see whether that's going to hold. What we are going to have with NVIDIA is that you're actually going to have, we got a lower low out of it. You have some volume out of it. So thus far, you know, it is still banging into these swing lows with volume. So we'll see where the whole thing does end up shaking out. But it looks like NVIDIA still is going to go after this bounce, that high volume low that's hanging out there. Tesla still has some trouble out here. Tesla, same type of setup actually, meaning that you went to a lower low, you got $288 today, you had expansion of volume, you were going into the 286, you had 6 million shares there. We got 288 and you did 14 million. You know, now it saved itself, no doubt, today, but guess what? That's not going to be enough. Because now what you're doing is that you're pushing into those lower levels. You have an expansion of volume. Tesla would have to get above 309 to be out of the woods. You know, that's not bad where we are. That's for sure. There's no doubt about that. So we'll see where that shakes out. But it looks to me like before Tesla gets a lot higher, I suspect it's going to hit that low first. But the bottom line with Tesla, this is what's really wild, though, is that it does have a high volume high now at 387. So the shorts basically are not clear yet, and the longs are certainly not clear either. The battle is going to basically continue out there, I suspect, in a big way. If we go take a look at the energy markets out here, the XLE is up 56 cents. This is a long way to basically get back inside its higher range. XLE got torn apart last week. Goes lower with the 26 million shares. You're going up with 6 million. That's saying that the ExxonMobil, this is up 59 cents. That has light volume on the rebound. Chevron can't move at all. So it's interesting. Chevron's going to be the problem child. Exxon was the problem child for a long period of time. Now it's going to be Chevron that basically broke down out of the consolidation. Chevron is trading at 117 bucks. You know, last week we were up at 121. Breaks the whole consolidation, breaks that consolidation with monster volume. Some of the other higher equities out here that have traded up or down with volume out here today is that we have Ford's up 18 cents. You have Netflix. We'll go to Netflix, take a look at Netflix. That's up $11.40. We get Micron Tech is up $1. GE, oh, look at GE. Might as well go GE. Put her out of her pain. This is problems in paradise. GE still can't catch a bid. The closer that we get to this 1135, the more problematic that it gets. And 1135 is the high of the low of 2009. And we're laying right at it. We got to 1194 last week. Excuse me, folks. So that's a number that you want to absolutely keep your eye on. NFLX. Let's go take a look at Netflix. Netflix out here up 1125 today. The low for Netflix for this year. Look at this 12-month range. Pretty amazing. The low was last August 21st, $164. The high this June 21st at $423. This has come down hard. Has volume off the high. Okay, so this is a little problem with paradise for Netflix. This is what it is. We made a high in June. You made the high with 68 million shares. We tested the high with 58, and then we came off the high with 135. It's a problem. That sets up first place. It got 304. Yeah, so this got some support from the strength from April of 2018. because it came down into that level. 41 million shares versus 62. So this is going to have to build cause for basically lower price. We'll see how this shakes out. We'll be able to tell if it's, in fact, for lower price once this bounce gets a little bit bigger. Thus far, all this is a dead cat bounce, because if we take a look at this in the daily, what you're going to see is that you did 12 million shares. Well, you're coming into this vicious downdraft that was, I suspect, when it come out with their numbers. That's when we went from 385 to 344. So 344, you did 58 million, you're up with 12. That isn't conducive to going to higher price. We had Coca-Cola, it was Coca-Cola today, I believe, bought SodaStream. Oh no, it's Pepsi, I think, right? Hold on 1 second. Yeah, so Pepsi bought SodaStream. So Pepsi is trading at a price point of 114 bucks. They paid up too, there's no doubt. It's at its highs though. SodaStream, SODA, and what you are going to hear is that, yeah, they paid 11% premium. That 11% premium, that being said, folks, from Friday has nothing to do with where the stock was. This stock only 3 weeks ago was at $85, and they're paying up to the tune of 142, I believe, and that's a cash deal. And the CEO, and that's not bad. So check this: the CEO of SodaStream is going to reap 61 million. Holy cow. SodaStream International Chief Executive Officers could collect as much as 61 million. Pepsi said Monday it agreed to pay 144 bucks in cash for the fuzzy drink dispensary maker. Early this year, shareholders were asked to approve 3 different equity awards for the CEO, entitling him to earn as many as 285,000 shares over several years if certain goals were met. Should they fully vest as part of the deal, he'll get an additional 41 million. Some of the shares are linked to stock returns, and it's not clear if they vest at the full 144 offering price. As part of the equity grant, the CEO waived a $500,000 cash bonus and 100,000 stock options if SodaStream receives at least 25 million in a third-party investment. Bottom line is that SodaStream, let me see what SodaStream does. So they, revenue-wise, it's interesting. Revenue-wise, this is not a company that's growing by leaps and bounds. So look at this, man. This is pretty intense, actually. So SodaStream in 2014 did 511 million. This year, 672. It's not a big deal. And the Americas, they're actually contracting. Asia, they're growing by 5% over 3 years. Europe, 5% over 3 years. Not a big deal, man. They're paying up for this company. Pretty intense. Stay right there, folks. Come right back. Our phone number is 877-927-6648. Dow Industrials are up 103. NASDAQ is up 11. S&Ps are up 8. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. 877-927-6648. We have the, let's take a look at this dollar. So dollar right now, folks, you get 16,000 contracts. That's light contract volume, really, on the pullback. We're at 95,805. So the intraday, what you had out here, and this is, you know, so we had a high in the dollar today of 96.05. You're only down slightly off of that high. That being said, last week, what we did have, we had a rejection of higher price, you know, bottom line, you know, we got up to 96,860, couldn't handle it. Now we're going to back down. It's going to see whether it can get back inside this 95,440. Now, what I expect we are going to see, what happened intraday, news-wise, where that pushback, it was reported, let's see, by Bloomberg, actually, that you had a fundraiser on Friday night in the Hamptons for Trump, and what you had here, let's see. So he was explaining to some folks, and this was confirmed by 3 separate people that were there, that here's his quote. Let's see. So he expected Jerome Powell to be a cheap money Fed chairman, and bottom line is that instead he has raised rates 3 times since he's been the Federal Reserve chairman. Oh no, 5 times in this year, 5 times since Trump actually took office. Trump said that, let's see, people describe cost. Let me get this. So we said that, let's see. Here it is. Okay, he pronounced he's not thrilled with the rate increases. That's what it comes down to. So intraday, when this came out, intraday, that basically pushed a little bit lower. What I expect you're going to see out here, so here, let's first go into the Fed Fund future rate. So the Fed Fund future rate is still saying that as of September 29th to September 26th, that's the next meeting, there's a 94% chance that they're going to go up in the Fed Fund futures short-term rates. That's the bank-to-bank rate. Right now, the bank-to-bank rate is 1.75 to 2% overnight rate. That would raise it to 2 to 2.5. Now, the market is saying that there's also a 60% chance that there'd be an additional rate rise in the December 19th meeting. So we have September 26th, then you have November 8th, and then December 19th. So we'll see how this shakes out in between that area. What I do expect we're going to see, because this is what you also have, is that this coming Friday, you have the Jackson Hole meeting with basically the Fed watches, all of the above. It's always a big deal. You can expect that Trump is going to be out there. I suspect he's going to probably go after this dollar once again. You know, that's how it seems to be setting up. And we'll see. We'll see if, in fact, it's going to push some selling into it. The thing that's pretty bizarre here has to do with not how the dollar's trading, it's how the bonds are trading. The notes and the bonds are saying that people want their money back. They're coming into that market. It is just the opposite of what the Federal Reserve is looking for. What the Federal Reserve is looking for is that each and every time that they go up on short-term rates, they expect the 10-year rate to basically go up simultaneously so that rates in general will get higher. Well, that hasn't happened. You know, what has actually happened here is that there are more buyers than there are sellers inside the note and the bond market. And then on top of that, what you have is that the short position that is in the note and bond market right now is a very large position. So, you know, if we go back 3 weeks ago, you had the 10-year trading at 119.02. You know, we're at 120.20, so you're almost up 2 full points, which on a 10-year, that's a big number. That would bring the 10-year from about 3.1% to 2.8, where it's at. The metal to the pedal is going to be, I suspect, the next couple of days. This is why. The 10-year today has overtaken the top of its consolidation. The top of that consolidation is 120.15. We're at 120.20, and it has some decent volume behind it. We had the spike high up there at 121.01. It looks to me like, number one, you're going to go for it. The real question is going to be, can we take that out, and does it have the volume to take it out? If we go over to the 30-year, 30-year is kind of getting up to the top of that consolidation, and the 30-year had a higher end consolidation. It also didn't back down as much as the 10-year. So 30 years up almost a full point. Right now, 145.28 is game. You're at 145.16. The danger in both of them for the bears is that we get into that level. If we get into that level and simultaneously you're getting big volume behind it and you get a huge short position like that, it's going to be pretty intense, because this is what ends up happening, folks, in the 10-year as well as the 30-year. The amount of margin you have to put up for what you are holding is very minimal inside the bond market. The bonds are great to trade, you know, basically not just because of the leverage, but because the bottom line is that normally you don't move like a point like the 30 has moved today. But just picture this, that for $2,500, you are leveraging, okay, $100,000, you know, inside the, you actually know, you're leveraging $145,000. So check that out. So 2,500 leverages 145,000. Now, today, if you're on the wrong side of that, well, guess what? In the 30-year, you know, bottom line is that it's up $1,000 or down $1,000, depending on which side of the market you're on. And of course, if you're bull, you're up 1,000. You're bear, you're down 1,000. If we go and we take a look at the 10-year, what you're going to see is that in the 10-year, bottom line is that for $1,100, $1,155, you are leveraging $120,000. So in that particular case, you can see, you know, out here today, bottom line, we were, let's see, 32. So you're up, you're either up or down like at $330 out of the 1,100. So you can see on a short position, number one, the type of leverage you can get when it's going with you, but that's the real kicker. The other side of that is that when there is a short squeeze inside the bond market, it can be fast, furious, and it just rockets. I mean, you know, I suspect what we actually had, these high volume swing points it looks to me like, you know, going back to the 29th of May, that's exactly what was happening. Because 29th of May, folks, we went up 3 points inside the 30-year bond. 3 points in one day. I mean, it was that's about as intense as you get. Now, that's what we're coming up to once again. That's where we're reaching up to. So we'll see where notes and bonds want to go on the other side of that. See, the way that the dollar is trading right now, the dollar is saying it does want to get back inside the lower range. That would make sense if, in fact, these bonds keep going, and if, in fact, that the Fed, does go up on the rates on the 29th of September. I can't see them not, but I can see them not going up in December simultaneously. Stay right there, folks. Come right back. We have the Dow Industrials up 98, NASDAQ up 7, S&P's up 6.5. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So let's go over and see what the Atlanta Fed chairman is saying. So the Federal Reserve Bank of New York Bank of Atlanta president said, let's see, I pledge to you I will not vote for anything that will knowingly invert the curve, and I'm hopeful that we will move forward. I won't be faced with that. Bostic said Monday in Tennessee in response to an audience question. The market is going to do what the market does, and we have to pay attention and react. Okay, so what this is when I was bringing this up a little bit earlier, folks, about the aspect of where the Fed fund future rate is now and how that would basically affect the curve of the yield curve. So what happens is this. So picture this. Right now, we're at 1.75 to 2. If they go up in the next rate, it's going to be 2 to 2.5. Well, picture this. On the third one, it'll be 2.25 to 2.5. And guess what? That would invert. It would just come it would be really close to inverting the rate, that's for sure. Because we're at 2.8 right now. If they keep buying the 2-year, oh, it would invert it in a second. Yeah, it would be inverted. Because the 2-year right now is at 2.58. So if the bank-to-bank rate goes up to 2, yeah, that's where it would basically more likely invert. If we had 2 more rate increases, we would be at an overnight rate of 2.5, yeah, to 2.75, and the 2-year right now is at 2.58. The 10-year is at 2.82. So, you know, that's where some Fed governors, I suspect, are going to struggle. And right now, he's coming out and saying that he would not vote to up the rate once again. Stay right there, folks. We'll be coming back with some numbers after the close. Dow Industrials right now up 90. NASDAQ is up 4.5. S&Ps are up 6.5. Gold is up 12.80. Silver's up 11 cents. Notes and bonds of the story. Notes up 12 ticks. Bonds up just about a full point. Come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Got our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great week, folks. It's hard to believe we're going to be kicking into the last 2 weeks of summer. To begin a great relationship, know what you want. Know what the needs of your body are and what the needs of your mind are and what fits well with you. There are millions of men and women, and some of them will make a good match for you and others won't. The two of you only need to be like a key and a lock, a match that works. Market-wise, let's take a look at it out here. We have the Dow Industrials up 89, NASDAQ up 4, S&P's up 6. Gold contract up $12.50, trading at $11.9670 an ounce. We'll start right with the gold market. So gold out here, folks, got to a price point last week of $11.67. It came off the lows, out here today, you get some price. Volume's not bad, not great. You're at 198,000 contracts. Gold, the next level, if gold can get back inside the 1212, then we get some action. Bottom line, I expect you're going to see some action out here tonight. We'll talk about that in a few more minutes in correlation to the good old U.S. dollar. If we go over to the silver market and we take a look at silver, what you're going to see with the silver market is this. Silver was up 10 cents today. This also got trashed last week. This got down to a price point of 14.31. You're at 14.76. This has to get back inside the 15.25 area. We had 70,000 contracts today in the silver market. That's not a lot of contracts in silver. Bottom line, we want to see like over 100,000 contracts inside the silver market as that tries to get into higher price. Oil market was basically up 52 cents, flat market. If we go take a look at that oil contract, what you're going to see out here inside the oil contract is that this came down last week. We got come down from a price point out here of the $69 level. You're at 66.46. You've done 790,000 contracts, and that's going to be light contract. Yeah, that's actually 79,000. 1 second. Let me make sure I'm on the right contract. What happens in the oil contract, folks, it goes month by month. So these turn over pretty quickly. So yeah, I was on the right contract. Okay, bottom line, this is going to need a lot more volume, man. This is a super dead cat bounce. So what we have with this baby, you're coming into yeah. So 66.46. This has to get over like the 67 mark to do anything. This is still building cars to get into the 62 area. Notes and bonds, big day. Bottom line, the note as well as the bond market are up at the higher end of the consolidation. They closed at their highs. You have the 10-year did 1.1 million contracts. This is going after its swing high from the 30th of May, which is 121.02. Now, I expect we're going to run after that because what we did do out here in the 10-year today is that we cleared the consolidation. Top of that consolidation, well, we're right at it, actually. If I show you this, where do you see this? This is wild. We're right at 120.20, which 120.20 was the spike high on the 6th of July. What this is going after is the spike high from the 30th of May, which is 121.03. If we take a look at the 30-year, now when you bring the 30-year back, the 30-year is also going for the top of its consolidation. Now, if I bring the 30-year, I'm going to put this on a continuous contract. What you're going to see is this. This is a big number, what we're going after. The reason being is this, is that when the 30-year, so the 30-year, folks, broke down into a much lower range when going all the way back in January of this year. That's when the 30-year, you know, went from a price point of 155, dove down to 142. 148 is the number that, number one, I expect we're going to go after. Now, the real kicker is, and we're going to know in the next few days, if this takes this out in volume, if it takes the top of this consolidation out in volume, this has a huge chance to get back up into much higher price because we've been consolidating now since February of this year. You know, it's a big number. That's the 30-year. 10-year is set up the exact same way. King dollar, what you can expect with King dollar is this. King dollar last week couldn't hold price. You had light volume on the weekly. We had out here today, you're down 270 ticks. No big deal. It's a quarter penny. You did 17,000 contracts. That's really not a lot of contract volume. That being said, intraday out here, you had the first sell down when it was reported that Trump was basically complaining at a fundraiser in the Hamptons about Powell raising rates so many times. Right at the close out here today, a minute before the close, actually, Trump also tweeted out that he felt that the Chinese as well as the Europeans were manipulating their currencies. So next up on the agenda, more than likely, folks, is that we're going to have a currency war. Why not? We have tariffs. We have you can just start going through one after the other, meaning adversity. Next, currency war, I suspect, is going to be out there. And if that's what we get, what you're going to see, we're going to wake up in the morning and bottom line, he goes over to Mnuchin at the Treasury and says, man, start selling some dollars. So we'll see where this shakes out. I suspect that this is not going to stop tonight. Why? Because it was done first it was reported, evidently it was reported. He didn't mind it being reported. He tweets out at 1 minute of 4. What that will do out here tonight is that, let's go over to the yen for a second. He didn't bother the Japanese, but the bottom line is that the yen were at 110.14. This looks like it wants to get stronger. So the yen looks like it wants to run down to this 109 to 104 area. And if that's what we have, you're going to catch a bid inside these metal markets, because that would basically bring the dollar back. And if the dollar does get back inside the lower range, you want to see how it does it. Because if it comes back inside the lower range and the volume's still light, guess what? That's just a return test, and it'll probably get out of there again. If we come back inside that range with volume expanding, that would be the end of the dollar going up. The dollar's been going up for last 8 months, 9 months. That would be the end of that trend. The reason being is that when the dollar did break topside, it didn't have the volume when it broke topside, but it got above that area. And that was the first bounce that we had in a long period of time. 877-927-6648. The volume's out here inside the NYSE, folks. We did 648 million. That's really light volume. You can expect that, though, last couple weeks in the summer. Inside the NASDAQ Composite, 1.6. So in both cases, you had volume dying on the vine. Come right back. Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Let's go into the world of the small caps first, the IWM. So IWM out here, bottom line, up 47 cents. You're laying right at the highs. The highs in the IWM, 170 bucks. We are at 168.82. You're coming into like 28 million, done 12, but bottom line looks like it wants to go after that high. The SPY, the SPY, that's also laying right at its highs. The SPY was up 61 cents today. The highs that were generated, and this is a small island top, by the way, is 286.01. We hit 285.97 out here today. The NDX 100, this is the weakest indice. Bottom line, the Qs, we take a look at the Qs. What you have with the Qs is this. The Qs, sideways market, down 16 cents, sideways market. Bottom line, light volume, 23 million. I suspect what the Qs are going to do is that they look to me like they really have topped out. You know, inside the NDX, what you had out here today, now this was pretty intriguing, because at the beginning of the day, folks, you had NVIDIA was leading the NDX down. So watch this for a second. So NVIDIA, bottom line, traded to a low today of 238. Ended up rejecting lower price, ended up closing $10 higher. And that being said, that didn't help the NDX. Why? Because what ended up happening as the NVIDIA was going higher, BioMarlin, bottom line, end up going into lower price. That was down 1.8%. Charter Communications took over. That was down 1.5. You had Align Technology down 1.4, and then you had Mercado Libre down 1.3. When you take a look at the structure in general, what you're going to see is that the NDX 100 was basically really lucky that Priceline was up, because point-wise, what you had Priceline. It's called bookings.com right now. That put 17 positive points into the NASDAQ. You had Google putting 6. A couple of the other high flyers, Netflix 10, but you had many putting negative ones in a big way. Amazon, Laboratory, Hospital Corporation. Bottom line is that you had more pressure on the way down than on the way up. There's a question in the den about give you opinion about South African nationalization of their mines and the impact on the metal. The bottom line is that this has been going on for a long period of time. It's not a full nationalization. What it is that it's the Black Power Empowerment Act in South Africa. And when they divided up the mines, this is years ago, the bottom line is that there is a certain amount that the miners actually have to own as a portion of the company. So that's not going to have an impact on the metals. The companies still run the metals. The problem with the all South African companies is this, is that they have the largest gold still in the world. That being said, they have to go down. Watch this if I can get a few of this up. And when you see how many miles they go down to mine gold, it's just a mind blower, man. You're talking about 12, 14 miles down in the middle of the earth in order to get gold out. And that is a big problem. Okay, so first we're going to look at Harmony Gold. So Harmony took a $5.3 billion Rand write-down, that's 386 million US, on a group of South African assets after accounting for expected cost inflation and a subdued gold price estimate. The Johannesburg-based company is among producers grappling with the difficult operating environment in South Africa, once the world's largest gold producer, where output of the metal dropped for the 9th straight month in June. Rising costs, aging infrastructure, and depleted reserves pressing operators in the industry responded by curbing production and shedding thousands of jobs. Okay, so let me get this down. The company, just so I can see. Yeah, it doesn't have in this one how far Harmony has to actually go down. What you do have is this. Now, this is where if you're in the gold business, if you're a bull or a bear, this is something that you want to understand. The all-in cost right now for a Harmony Gold, and Harmony, let's see, I mean, they trade millions of ounces of gold. Let me just see if I can pull this up quick. So revenue-wise, well, they do $20.9 billion. 2014, they did $15.7 billion. That's Rand dollars, by the way. That's not going to be U.S. dollars. Bottom line is that their all-in cost is $1,253. So what does happen is this. So all-in cost specifically means that you get the gold out of the ground, you get the gold to the mill, you push the gold out, you sell the gold, then you fix the mine. Well, you can see we're only at $11.96. The bottom line is that when you are under that gold's trading under the cost of gold, number one, you have a long period. You're not going to have that longer period before they start shutting down a lot of mines, because each and every ounce that you're pushing out, you're losing money hand over fist. When that happens, folks, in a commodity market, yes, you can stand the production cost for a certain amount of time, but guess what? I would say that we're at that level. You know, and that's not all gold miners. There's plenty of gold miners that can get gold out of the ground a lot cheaper than that, but not dramatically so. Not dramatically so. And what that does do, of course, is that less demand, well, less supply equals what? Equals, bottom line, it doesn't have to be more demand. All you need is some type of demand at all, and that's when you'll start having the price stabilize, number one, or go up. Because you're going to remember something. A great mine, so picture this. This is what you want to wrap your head around if you're in the metals market. A great mine would basically get you 1/10 of an ounce out of a ton of dirt. A ton, 2,200 pounds, only gets you 1/10 of an ounce, and that's a great mine. So picture, you got 10 tons of dirt for 1 ounce, right? When you start breaking this down, guess what, folks? We're going to see, number one, gold stabilize. Number two, I expect we're going to start seeing a couple bids inside it. One of the Tigers just sent me, this was pretty cool. Man, GG from New York. Watch this. I got to pull this up. So this was on CNN this afternoon. You know, they keep changing headlines, but this is a good one. The gold rush is over, and there's a picture of a gold bar, and this is what we needed, folks, if you're in this. This was, it's 11:51 this morning, that the gold rush is over. Bottom line is that he's talking about concerns that a Turkey currency crisis will spill into other emerging markets in Europe aren't spooking investors. Just look at gold. It's supposed to be the classic fear trade, something to buy when things are falling apart. Well, guess what, folks? It's not the classic fear trade. If you learned anything, well, that writer should have learned that in the 2006 debacle on the way down. Because guess what? When no one has any money, everything goes down. This is a different ball game. This is just a value play. Stay right here, there, folks. Come right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow finished up 89, NASDAQ up 4.5, S&P's up 5.5. And this is going to be, I suspect, a volatile night inside the currency markets. So what we had out here, folks, starting about 2 o'clock this afternoon, you had the first indication that Trump was at a fundraiser, bottom line, start complaining about Powell. Now this thing is breaking open a little bit more. So here you go. So this is Reuters just reporting the rest of this, okay? And Trump did come out with another tweet at 1 minute of FOA, complaining about the Chinese manipulating the currency as well as the Europeans. But here we go. So we had 4 or 5 of them right in a row. So Trump says that when U.S. put tariffs on China, China is artificially lowering the price of the yuan. Then he goes from that. His quote is, "It's very dangerous when companies like Twitter, Facebook self-regulate content on their platform." And so here's the quotes on this. This just come out right here. So Trump said he disagrees with the Fed decision to raise interest rates, not thrilled with Powell for doing so. He said he believes that the Fed is doing what's good for the country when asked if he believes the Fed being independent. He said the Fed should be more accommodating, adding that I should be giving some help by the Fed. He said he will criticize the Fed if it continues to raise rates. Bottom line is that I expect that won't be the end of it coming into tonight, folks, because you had the pattern set up. The pattern was set up pretty good, actually. And what you do have with the dollar is that you got to that higher high last week. It took 6 weeks to break out. You know, had a decent breakout. It got away from the highs. So 95,440 was the number. It got up to 96,860 last week, but it just couldn't handle it. Now it's going to get intriguing is that how it's going to go test out this 95,440 level. And we'll see if I bring this dollar index back and put this on a continuous contract. The reason I'm going to put it on a continuous contract so that you can see, number one, what we did. So that the dollar since the January of 2017, bottom line, was on a road downtown. You know, we went from a price point, I think it was 103. Yeah, it was 103, and we go down to 88. We started out at 103.575, straight move down to 88. Straight move up, so 88 was tagged out in January of 2018. We go sideways for about first 16 weeks. We go up from there. Now, that being said, the 95 900 mark was a 50% retracement of the whole move down. Now, what the market had been trying to do and did is that it had been trying to take out the swing highs from October of 2016. It took them out. It didn't have volume when it took them out. Bottom line, it took them out and got away from it. Now what it's going to try to do is get back inside that level. And how it tries to get back inside that level is going to be the whole number. If we come back inside with conviction, meaning you do have wide price spread and we get volume, guess what? It's curtains. It would be saying we're going right back to that low. If you got back inside and you only got back inside with light volume, different ball game. That ball game would be saying that we are just coming back inside that. You're going to test that area, and it'll probably take off topside again. If we go over to the euro and we take a look at the euro, what you have with the euro out here is that right now we're at 114. Well, the euro is right back. The euro is actually much closer to getting back inside its range. It only needs, let's see, we're at 114.80. The euro only needs 200, 114.80. Yeah, we only need, like you need 420 ticks, which is nothing to get back inside the higher range. And if that's what you get, that's saying that the dollar is going to go back inside its lower range. The way the yen is trading out here tonight, it looks to me like the yen is going to get stronger. That should put a bid under the gold and silver market. It also should take away from the U.S. dollar. The bonds and notes are already saying that this U.S. dollar wants to go lower because the bond and note market, including the TLT, is saying it wants higher price. You know, the 10-year laid out today right at the closed out right at its highs. We closed at 120.21. Year did 1.2 million. The 30-year closed right at the very top of its range. We're at 145.16. The high is 145.28. We went up 31 ticks. 32 ticks is a full point inside that bond market. And the short positions that are piled up inside the note market, the bond market, as well as the gold market are basically very large positions. So if, in fact, that we get some action going topside again tomorrow, you're going to see some big action. The reason being is that when you come to the top of a range, if you start breaking that range with volume, those short positions, more than likely, not all of them, a lot of them will get closed. Apple looks like it's going to basically try to revamp the Mac books so they can get into a lower market. Apple's going to release a new low-cost laptop that's going to be an upgrade to the Mac Mini design later this year, ending the drought of Mac computers that had limited sales of the company's longest-running devices. The new laptop will be similar to the MacBook Air, but will include thinner bezels around the screen. The display will remain about 13 inches. We'll have higher resolution, Retina version of the Apple used on other products. Bottom line is that, you know, and so the current MacBook Air costs $1,000 and remains Apple's only laptop without a high-resolution screen. The MacBook Air was last updated with the faster processor option last year, but it hasn't seen a major overhaul in several years. The 12-inch MacBook launched in 2015 was a replacement. That started at $1,300. It'll be interesting to see what price point they're saying they're going to sell it at. It doesn't say exactly what they're going to sell it at, but what they're going to try to do is bring that cost down. If we take a look at Apple, Apple's trading at its highs, hit a new all-time high today, I think, 215.11. I think it is. Yeah, hit 219.18. You know, bottom line is that what you do have with Apple is that that's just the 214 number was just finishing up an ABC structure on the way up. So it looks to me like we'll see what kind of juice Apple can get now that you know, numbers are finished. What we do have is this: is that most of the big companies are reported. You're coming into the last 2 weeks of the summer. What we did have out here today had a big contraction of volume. If we take a look at the NYSE today had 648 million shares. That's low volume, big time. NASDAQ Composite had 1.692, same type of setup. That's expected at this time of the year. That's the bottom line. Stay right there, folks. We'll be coming right back.
Our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
In 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Let's go over and take a look at Bitcoin. So XBT, Bitcoin hanging at these 6,400 levels. Bottom line is that what we had done a few weeks ago, July 13th, we hit the number of 6,081. You run up to 84. We run back down to 58. And if we take a look at this, the longer that this stays at the lower end of this consolidation, the higher the probability, folks, that you're going to break down and get somewhere into the 4,900 mark. So it's pretty intense, because what we do have here is this. you can actually bring this back all the way to, yeah, February 9th. That February 9th, man, is just everywhere. Bottom line, you bring it back to February 9th. That's where the bottom of the consolidation is, and we're pretty close to that bottom. So that is going to be a little bit dangerous inside those cryptos. And if you haven't test-driven yet the Nadex platform, folks, come over to our website. You'll see the banner on the top or the side. You hit the banner, bring it up. They'll put $25,000 of paper money into your account. You can see how these defined option contracts trade. In the Bitcoin world, you can trade the weeklies or the monthlies. They're both out there. We take a look at the, so check this out. This is pretty wild if you happen to be a muni bond investor, and this is what it is. The amount of cities, folks, that have taken bank loans have exploded inside the U.S. So, you know, if we go back in the muni bond market in general, 2007, 2008, you had a bunch of these blow up in a huge way. Those were issues that the bond market knew about, meaning that whether it was, I think Louisiana put in a sewage system, there was some messes out there in a big way. Bottom line, people lost a lot of money. The Security Exchange Commission came out today, and they're going to make the cities and states reveal exactly how many Wall Street loans they have, because listen to this number. This is pretty intense. So the Security and Exchange Commission moved to require state and local governments to disclose bank loans and privately placed debt, seeking to address concerns that bondholders are being left in the dark about a fast-growing segment of public finance. So picture something. When you're investing in anything, right, you want to know what their balance sheet looks like. Well, what has happened inside the bond market is that the states and the cities have been basically getting away with quite a bit, meaning that investors, number one, aren't looking over their shoulder for the amount of cash that is coming into these cities, because most times a lot of these bond issues are saying, okay, listen, we're taking in plenty of cash. This is all we need. This is what we're going to do. Well, bottom line is that the cities and states have upped the ante with the Wall Street banks. And wait to hear the number, though. This is the number. That's pretty intense. So the SEC is adopting an amendment to the rule known as the 20thTom, which obligates security dealers to ensure that municipalities are reporting their updated financial information and material events to bondholders. The amendments are going to force disclosure of loans incurred by the municipalities, loan defaults, and changing to the financial covenants that affect bondholders within 10 business days. So watch what happens is this. This is what ends up happening. Let's say that you and I buy a bond off a Wall Street dealer, and it's for a certain city. What this regulation is going to do is that if the city, let's say the city just came out, we just bought a $50 million bond. 10 days later, they turn around and go to another Wall Street bank. Another Wall Street bank turns around, gives them another $50 million. The way the law stands right now, that doesn't have to be disclosed. Well, that's going to change. So the disclosure is going to require by these rules, the amendments will better equip, of course, investors and intermediaries to make informed decisions about the municipal securities, because these municipal securities, folks, go up and down in price every single day. Now, here's the number. Listen to this. So direct lending by the banks to the states and to the local governments have gone up from, in 2010, $66 billion. The first quarter, let's say, yeah, it's tripled. So $66 billion was 2010. Now they're doing $190 billion. So you can see what's going on. Now, one of the main reasons also is this, is that let's see. Yeah, it's not that they're actually paying higher interest rates either. What it is this. Is that, let's picture when you do a bond offering. When you're doing a bond offering, number one, you get the disclosure statements, you get the fees that are wrapped around the bond as Wall Street pushes out the bond. That gets expensive, right? So what has happened now is that a banker does two different things. The banker will turn around, go out to the market, run the munis out, so you're running the bond issue out, simultaneously, or within the next couple months after that, turn around and then lend the state or the city additional funds from the bank. And what the difference is that you don't have the fee structure inside the loan, you don't have the disclosure inside the loan. Bottom line, the banks themselves, and this is with banks, it's always wild how banks are basically, they can always find somehow in some way to push more money out and not hold the paper. Because what happens here is this, is that as that bank had already sold the bond, they're not holding the bag. The clients are holding the bag, okay? Bottom line, then what ends up happening, if that happens too often and the leverage goes up, you can bet money, which wasn't in that article, as to what the security was. I can bet you money the security for the loans from Wall Street and the banking community to the funds and the state have much better collateral than the actual municipal loans have. That's how this seems to be shaken out. Trump just come across saying there's going to be no concessions with Turkey over the pastor. And what is going on? And that's when I was just Reuters right now is actually interviewing Trump live. That's where that come out about the U.S. dollar. That's where it come out about the euro, the yuan, and evidently this is still going on because this just came across the tape. So at the last break, that information there, including the aspect that Trump said, yes, he will keep pressure. Well, he said he'll keep criticizing the Fed if, in fact, they keep raising rates. Well, right now, the Fed fund probability rate is still at 94% for the next September 26th. December 19th is going to be the one we want to watch tomorrow. So it's 60% right now for December 19th. And I suspect by the time that we get in here tomorrow, folks, that rate is going to start inching down a bit. We'll see where this shakes out. But what you're also hearing is that the note and bond market, everyone keeps continuing to buy the 10-year and the 30-year. So right now you have more demand than supply, which keeps interest rates low. Dow finished up 89, NASDAQ up 4.5, S&P's up 5. You can expect pressure inside the U.S. dollar tonight. You can expect the euro going higher. I expect the yen is going to get stronger, and I expect the metals are going to get stronger. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow finished up 89. You had the Nasdaq up 4.5. S&Ps were up 5. If we do go look at that composite, folks, the composite as well as the NDX, that's still the weak dog out here. Composite sideways move. We're at 78.21. Now the highs are we're right next to the highs. I mean, 79.33 is the high. That being said, it's still having a hard time getting any type of traction. What we are going to be doing after this week, okay, is that you're going to be coming into window dressing next week. You're going to be coming into Labor Day. That's where, bottom line, week after Labor Day, that's when you're going to start seeing real volume inside these markets again. What I do expect you're going to have out here overnight as we open into the Asian markets is you're going to have a little volatility coming inside the currency markets. And the currency markets very well could throw everything for a nice little spin here. So if we go look at the Asian markets, last night in Asia, you had the Nikkei was down 0.3%. Shanghai was up 1%. Now, Shanghai has been getting smoked for a long period of time. Shanghai right now is trading out at 26.98. And if we pull this back, what you're going to see is that this thing is just laying at lows. You know, if we go back to 2015, you're at 5,100. You're at 26.98. You're going into the high volume swing low from January, which is 26.38. And last night we hit 26.53. I expect you're going to go right into that level again because it looks to me that bottom line, Shanghai is going after these. It wants to test that number. You know, we had volume last month. Big volume, actually, 304 billion. It was going into 400 billion. Yeah, I expect that's going to get tested. We go take a look at the Nikkei in Japan. Nikkei in Japan traded down 71. This looks like it's going to go after the lower end of its consolidation, which is 21,750. So that's down about 1,200 points. And I suspect what will get that down there is the strength of the yuan. The yen, rather. The yen right now is trading at the 110.06. I expect that's going to get into the 109 mark tonight. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows, and whatever you want in life, folks, visualize it, step into it, take ownership of it, and fly with it. Thanks for being here, folks. Look forward to speaking to you right back here, 8 o'clock tomorrow morning. Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.